I said AI sure hasn't helped us at all.
Yeah, no, like I said, we're technology at dinosaurs apparently. I don't know. Um, Forbes always releases, the latest and greatest of what's going on. They've done the Bitcoin stuff, they've done Sam Bankman-Fried, they've done, all these people who have ended up crashing. And the latest one that they did was Nvidia, and the CEO of Nvidia and everything, and making him look like a superstar and all that type of stuff. And now so much has kind of been happening around Nvidia. Of what it's looking like back in the Cisco days of the 2000 .com crash and all that type of stuff. So it's kind of funny what's going to potentially develop and how Forbes predicts the future. All right, welcome everybody back to the Half Truth. I know we've been away for a while. We've had a lot of developments happening in the markets in our world, so it's kind of been a little time. Plus the holiday vacation, it took us a little while to get back into the groove of things. But today we got some special topics for you and some new developments that have happened. I'm Patrick Moran, joined with Justin Singletary, and this is the Half Truth.
Yeah, Happy New Year, everybody. It's a little late, but whatever.
Um, all right, well, I guess I will kick it off here. Um, I just kind of want to cover, since it's been so long, I want to cover some of the stuff that we have been seeing going on. And one of the ones that has been really driving this market is AI. And it's kind of funny, we always see, um, and I'm not going to be able to share my screen. Window, preview. Can you see that? You
No.
cannot. I love technology. So, anyways,
Yeah,
Forbes
AI
always comes
sure
out
hasn't
with their,
helped us.
what's that?
I said AI sure hasn't helped us at all.
Yeah, no, like I said, we're technology at dinosaurs apparently. I don't know. Um, Forbes always releases, the latest and greatest of what's going on. They've done the Bitcoin stuff, they've done Sam Bankman-Fried, they've done, all these people who have ended up crashing. And the latest one that they did was Nvidia, and the CEO of Nvidia and everything, and making him look like a superstar and all that type of stuff. And now so much has kind of been happening around Nvidia. Um, of what it's looking like back in the Cisco days of the 2000 .com crash and all that type of stuff. So it's kind of funny what's going to potentially develop and how Forbes predicts the future. But Meta also, do you want to say something on that?
Oh, yeah, I mean, my first article is going to be right around all of this same stuff, so this is great.
Okay. All right. Well, and so Meta, there was a headline a few weeks back of how AI replaced the metaverse as Zuckerberg's top priority. And then just recently they announced the dividend, all that type of stuff to try and juice the stock. So it's the flavor of the month. It's the tulip, it's Bitcoin, it's NFTs, it's all this stuff that we've always had over the years of propping up the markets of something to shoot for or be around.
Yeah, I completely agree. It's also too, and I'll get a little bit, I'll talk a little bit as well when I get into my article, but it's uh, very narrow leadership. It's
Yeah.
not a very robust market. It was the Magnificent Seven last year. I've heard the Fantastic Four this year. So as we've said before, when the generals need to get shot, and it looks like three out of the seven got shot, and we still have four more to go.
Well, yeah, maybe even it's been the two. You haven't heard about anything other than Nvidia, which Nvidia's even gone a little quiet. And if it wasn't for Apple, Apple had the big run because they were, had some things in the news, and then it went from Apple to Meta. Meta having the big run because of them announcing the dividend for the first time ever in history, and now we're all out of the seven. Those are the top three. Who else is going to drive this market to with announcements.
Right. So
What was your article on that?
I'll elaborate a little bit more on that with my first thing, and the title is three dividend paying tech stocks to buy in February. So I'll
Was
list
that
off
was
the
that from
three.
Motley Fool?
Let's see here. No, it was Yahoo Finance. Let's see. Let me just double check so people don't start coming after us about. Oh yeah. One
Because that's
second here.
that's one
Let me
thing that I
just.
wanted to talk. Was going to mention too. I've noticed Motley Fool has been putting a lot of articles out on Yahoo Finance. So
Yeah.
so
So
that
you're
that kind
correct.
of
It
goes
is.
good.
Go ahead.
Well, it just goes to the fact of you can't believe all the news articles because that's not a news article, that's an opinion piece. And a lot of news articles now are opinion pieces, and it kind of goes into the point of why we started this. It's they have a reason behind why they want to push this article up because they're paying to be on Yahoo Finance to put that out there to get viewership to get people to subscribe. So there's always the underlying reason behind these articles. So go ahead.
Yeah. So yes, that was the article I'm going to talk about right now was a Motley Fool one posted on Yahoo Finance titled Three Dividend Paying Tech Stocks to Buy in February. So I'll list off the three and then I'll kind of get into some a little bit of whatever you want to call it data on some of them. So the three were Taiwan Semiconductor, the other one was Meta, and then the third one, which is the one that I like best of the three, was AT&T. Now, before I
Yeah.
get into AT&T and T and why I think out of the article that might be the one to look at or pay attention to, let's get into Taiwan Semiconductor as well as Meta. So when you look at just some different metrics when it comes to, stock, there are some things that, we all kind of just generally look at. And, as of today, Taiwan Semiconductor is priced at $131 a share, market cap of almost 700 billion. And here's what's interesting. I know we've mentioned in previous recordings, we talked a little bit about the PE ratio, and that's what they call the price to earnings ratio. And price to earnings ratio for Taiwan Semiconductor is 23.96, so almost 24. And if you look historically, typically when things are uh, over 20, between 20 and 24, 20 and 30, or 27, those are considered to be highly overvalued, not undervalued stocks. So, and it has a dividend paying 1.62%. So, who are Taiwan Semiconductor's top clients? Samsung, Intel, Apple, Nvidia, interesting, and AMD. So I don't know if Patrick, you touched a little bit on Apple. AMD's another, semiconductor, company. They've had a pretty good return over the last, call it 12 to 18 months. And then obviously all the hype around Nvidia. So when you look at and you go down and you look at Nvidia's top clients, who are they? Google, Amazon, Meta, Microsoft. And I only bring some of these things up because it's very incestuous. There's a lot of connections there, and that kind of goes to the point of very narrow leadership. You have Taiwan Semiconductor, top client Nvidia. You have Apple and Amazon both needing Nvidia stuff. Then you have Meta, top client of Nvidia. So you have all of these companies, and let me get back to market cap and PE ratios. So market cap for Nvidia, 1.7 trillion, or almost there. PE ratio of 91.72, call it close to 92. Meta's price 467 as of today, market cap 1.2 trillion, PE of 31. and their dividend is 0.044. Now, I don't know what they increased it to, if that's what they increased it to. I haven't, I'll have to look later today, but I just go, when I see these things and I hear this Motley Fool opinion piece, like you said, Patrick, you have two out of those three that have PEs that are just astronomical, especially, Nvidia wasn't part of that actual article, but they are involved in a lot of what the other two companies do. And so if you believe that the next 3 to 5 years that both Taiwan Semiconductor, Meta, Nvidia can just continue to keep growing in this parabolic state. I mean, to Patrick's point a minute ago, you had the Bitcoin craze, um, we had the dot-com stuff, and back in the dot-com situation again, at towards the end, very narrow leadership. Everybody was Cisco was huge. Everybody wanted to buy Cisco, even when it was at the elevated levels it was at. And what happened 3 to 4 months later? Most people got their face ripped off. So don't be surprised if in 3 months or sooner, or maybe even a little bit longer, that, if you start to see cracks in NVIDIA, you'll probably start to see cracks in, Meta, Taiwan Semiconductor. And then also on top of that, let me also add that though NVIDIA's, what they actually make when it comes to chips and semiconductors, yes, they are great. They do work very well. However, if you think about I'm going to use it, if you think about how the iPhone came out back in whatever 2008, 2009, big craze. Everybody wanted the iPhone, kept going, going, going. Well, how about now? How about over the last 3 to 4 years, the iPhone is essentially the same thing it was 3 to 4 years ago. The only thing that's changed is they update the operating system or the platform, and they upgrade the cameras in a few other areas. Well, if you look at the chip sector, there's not anything technically new that's changed from last year to this year. There's been no like major breakthroughs that all of a sudden, you know, we have these new chips that are coming out that are just light years ahead of the last one. So that just shows me that, and you have also too, just in this year alone, Nvidia is up almost 50%. That's insane. We're not even through the second month of this year, and to be up 40, almost 50% is really just ludicrous. And I just, it's hard for me to see a path that these can continue these parabolic states. And to our point about Motley Fool and these opinion pieces, at least what I believe they're doing is it's a bait and switch. What is the risk versus reward? All they're doing is telling you to buy these things while they're over in the background selling, and they're backing up their truck while the rest of the retail world is like, oh man, if I get into Nvidia now and it goes to 1,000, that's a pretty good return. Yes, if it goes to 1,000, you know. So I just, at least with those three or those two, the Meta and Taiwan Semiconductor, I would just be very careful in wanting to feel that the growth that they've had over the last 18 to 24 months, and even just in the last few months, is number one, sustainable, and really, depending on your age, risk versus reward. However, the third one, at&T, the best of the three. PE ratio of almost 9, so 8.84. Low, undervalued in comparison to overvalued companies. What is their dividend? 6.3. So really good dividend. And if you look at their chart from August of last year, they've had a really good trend and a good upward momentum trend. So, in my eyes, out of those three, you got to really take a look at and really be careful on Taiwan Semiconductor, Meta, mainly because of the incestuousness in between all of them. They're all very correlated in a sense of what they need and how they conduct their business. Um, So yeah, at least out of that, I would say that's a total, what does that article mean in my eyes? It means a bunch of bud kiss, unless you talk about AT&T. So I
Long
would
way to
just
go
be
for
really read these. Huh?
long way to go for this article's a bunch of bumpkins. Well, and keep
So,
in mind, this is not
again,
investment advice.
I'm sorry.
I said the viewers need to keep in mind this is not investment advice.
Yes, exactly. At the end of the day. So yeah, I
I,
mean, again, go ahead.
well, the NVIDIA craze, I think more of that is around rather than the semiconductors and the chips and all that type of stuff. Now it's been around the AI, for NVIDIA, the push for
Yes.
AI. But Watson, IBM was around how many years ago? That was 10,
The,
15 years ago that they came out with that. And the AI
the
really hasn't
2000s.
changed. Even NVIDIA has done interviews, like the CEO in NVIDIA has done interviews. And I sent you guys an article a while back, with the way that he described what they're doing in the AI space, made it sound like somebody describing Bitcoin and blockchain, that was like a huge investor in that and pro Bitcoin. And it just said a lot of words and didn't say anything. And that's AI right now. We are not anything different or anything new going on in AI. It's just now maybe more accessible to the masses, whereas it wasn't really accessible to the masses. So that's giving it a different skew and view.
And let's also remember too, usually when, the average person or the retail person is reading about this, the money's already been made.
It's over. Yep.
It's over. When we're those of us who, are the normal people of this world, when we finally start to hear, these articles of, hey, you should buy this, this is, these things can continue to run for infinity. That's when you need to be the most cautious. What is it? Warren Buffett's, saying of, when everybody else is greedy, be fearful, and then when everybody else fearful, it's, good time to be greedy. Well, we're at a very important point where I think we're going to see who's going to be swimming naked here pretty soon when the tide goes out.
And to your point of valuation, the PE ratios on semiconductors and Nvidia, are astronomical levels. They're still, by the analysis and everything, forecasted as not overvalued. So like that information right there is telling you that they're skewing, and not really giving you the full truth behind it because those are super overvalued at where they're at. And these analysis, groups that are coming out and changing their price targets from 700 to 800 or 1,000, they're just trying to get people to keep juicing it. So, like you said, they can get out at the higher price. The only one that's not, or AT&T is actually marked at the same. Like it's not overvalued, it's not undervalued, but it's got a PE of what, 8? Whereas that's
Yeah,
a value, right there. Anything below 10, is typically good. But even that is still kind of high for that company as far as, in my opinion, for growth and what they can potentially do. But it's still a much better PE than 36 or whatever Nvidia's at.
they're at 91.
91, okay, even worse. We
Mm-hmm.
should have a video and break that down on what that means of how much revenue and how much growth they need to produce in order to get those type of returns. It's just ridiculous.
Yeah, maybe on our next thing we'll take a deep dive and not really cover articles. We'll just really go into what, how the PE kind of works. Now, it's not always a perfect metric to use, but it is one that is very common. With that being said, I got this little chart here from Stable Investor, and it talks about the 3-year returns based on PEs. So a PE of less than 12, 3-year return was 38.7% positive. PEs between 12 and 15, 30%. Between 15 and 18, 17%. Between 21 and 24, 4%. And between 24 and 27, a negative 4.2%. Above 27 is basically a negative 8% return over 3 years. So what does that tell you? You're getting into an area where these values are just way too high and are not sustainable.
Yeah. Well, let's
Um,
shift gears out of AI and let's hit something else.
and then I looked at Palantir, which a company that I actually somewhat like. Their PE ratio is like 268. I mean, things that you have never heard before. So, I guess just be careful out there, folks. Just make sure you do quite a bit of research. Don't always follow these Motley Fool articles and opinion pieces. I mean, granted, these are our opinions, but at least we're trying to be a little bit more realistic on what we see and how we see it.
Yeah, and there's a lot of stocks that it's not just the Fang Seven that are not going to produce, or that we feel are not going to produce over the next 3 to 5 years. So,
Right.
um,
Um,
go ahead.
oh, I was just gonna say my next article is around Rivian. So
Okay,
is Rivian a buy or sell? And
sell,
thankfully, sorry, what?
sell.
Yeah. So, at least in this article, at least they did say, it's not a buy yet. However, I don't know if it's a buy at any time in the near term, or even intermediate term. Mainly because if you look at what Ford just came out with, what General Motors just came out with, that they're cutting, almost in half, if not significantly more, their production in electric vehicles. Unless you own a Tesla, there's been massive problems with infrastructure and charging stations. The vast majority of the charging stations across the United States, I've read articles that are saying, upwards of 40, 50% of them don't even work. So if you planned out your trip to go to somewhere across the country or just across the state, you pull up to a gas station or a charging station thinking, oh yeah, I found it on my list of places I can go to. And then you get there and you got to wait, a handful of hours before you even get to the charging station that works. So, when you start to see the big guys, Ford, General Motors, reducing, all of this money, all of this, money that they invested in when it came to EV, you had the Mach E or what is it? Is it the Mach E? Is that the Mustang one that Ford had? A
Yeah,
lot of people aren't buying. They're not buying them like they once did. Rivian, same thing, because where do you go to charge them? What, what? So when I see, hey, is this a buy or sell? Well, I mean, if you're selling, you're probably somebody already back up the truck and, got what they needed, and you're holding the bag at this point. But
I
I
think take
just
it on a
see
broader
these.
a broader scale. It goes beyond, like, I think all car manufacturers are probably not a buy right now. I just saw an article that delinquencies on credit card debt and auto loans are at or near levels of what they were in 2000. So that's
Yes.
telling you right there, like, people are struggling, and we're going to have a mass influx, in a car market crash. So beyond the electric vehicles that are already struggling to all the points that you just mentioned, it's going to, reverberate into gas vehicles as well, of, just car manufacturers not being a place that you want to be.
Yeah, I agree. So yeah, just be leery of when I going back to my Rivian thing. Just be careful. Make sure you do a little bit more research beyond just how the company's performing. Because even if they're making vehicles and they're selling vehicles, that's great. But if all of a sudden, as you see with General Motors, you see with Ford, people aren't able to charge them, people aren't able to do certain things, they're not as great as they were told they were, then nobody's going to be buying them. And I'm not saying Rivian's going out of business, but it's just be careful out there when it comes to those guys and a few other the electric vehicles. Tesla's a different story.
Well, Tesla's more of a, I don't know, some people say Tesla's more of a technology company than a car company. And
Yeah, I
I,
would
I,
agree.
I can see that, but they're still going to have struggles too. They have their problems.
Totally. But they had the first mover advantage. I mean,
yeah,
criticize Elon, which I've done all you want, but I do like him and I do like what he's done. He's built out the infrastructure for it, at least for his cars. I mean, so any articles I read about charging stations not working, Tesla's not one of those. It's whenever
yeah,
you have a different car that uses a different charging station versus Tesla. So, a little bit of a different thing there. And I mean,
yeah.
he's got these big, huge, mega factories that can pump out these cars. So, I mean, it's a different animal, but
Yep. Um, What I don't want to spend too much time on this one because we kind of beat it to death in our last video with where we talked about inflation or something like that. But yesterday, the founder of Fat Brands, which is kind of McDonald's, Taco Bell, all that type of stuff. I don't remember all the brands they have in there, but he came out and said burrito, Big Mac prices in California are going up to pay for the price of labor because in April here, California is going to $20, as a minimum wage. And he said someone's got to pay for that. So they're going to pass all that along to the consumer, which goes right back to what we talked about, that not every wage should be a living wage. It's going to just
right.
crush everybody even more.
Yes, and I'll reiterate a point that we had back to that when we had our video last year was when you look at the statistics and you look at the data shows that the vast majority of people that go work as their first job, yes, is not a living wage. However, the percentage is extremely high that 80 to 90% of the time the person that comes in at that entry level job within 6 months, 12 months and 18 months has moved on to either supervisor, manager, something to where they're actually getting into a position of getting to a living wage. So most of the time, this argument of, oh well, minimum wage needs to be a living wage is I go back to my word, bud kiss, because again, if most people have a good chunk of people have a drive of not wanting to be at the entry level. They want to move on to the next position, whether that's within the same company or within a different company. So just the data doesn't even match this
Yeah,
well, BS. I won't say the word, but yeah.
yeah, yeah. My last article, last week at one of our client events, one of our clients asked, kind of what I feel of the real estate market. And I said, we're going to have something similar to a 2008 type of event in commercial real estate. It's not going to be on the residential one, and it could be the catalyst that brings down the market. I don't know. But I said we have, CBRE and all the commercial properties are already struggling to buy and sell properties because of interest rates. There's so much debt that's maturing over this year and next year that if rates are still high, they're going to struggle. They're not going to be refinanced. They're going to have to liquidate because they can't keep up with the payments, all that type of stuff. And then Janet Yellen comes out yesterday and says she's concerned and sees a lot of stress ahead in the commercial real estate as a wave of giant loans come due this year. So if she's coming out who's perma bullish on the economy and all that type of stuff and saying we see a lot of stress because she mentions that it's the stress on the banks, because the banks are going to have to default on loans or have defaulted loans and stuff like that, that she's worried about the bank side of things. And that is the concern. She says it's manageable, but she's concerned. The only way it's manageable is if they bring down rates. If they don't bring down rates, there's nothing that can be done unless they print more money, which is going to cause more inflation, which is going to cause more, higher rates. So it's the only way that they're going to fix that commercial real estate market, in my opinion, is that they bring down rates. Otherwise, that market is screwed.
Yeah, I agree. I mean, well, and I mean, what's all the stuff that's going on over in China? What Europe's already experienced some of what's starting to happen here. Um, and I mean, what else? what can they do? I mean, if they, well, but I mean, they're in kind of a weird, predicament, because if they start lowering interest rates, that could start spurring other problems.
Well, I think her solution is to do what they did with, the other bank failures. They bail them out.
Right.
Like that's their goal in everything is to just throw money at it. We'll fix the banking system, let the commercial operators fail, but we'll fix the banking system. They'll probably let
Yeah.
some of the smaller banks fail, and if it trickles into kind of some of the bigger ones and going to be a systemic risk, they'll just increase their fiscal policy to go bail them out. Even Jerome Powell has said that their fiscal spending has gotten out of hand. Which I thought was kind of funny that he's even calling them out and saying you guys are spending too much money.
Yeah, I agree.
That's all I got. You
Well,
got another one?
nope. Those were my two. Were the dividend paying one, and then just talking a little bit about Rivian, and more importantly, was just about the overall EV market. Putting aside Tesla to some degree, but just more about
Yeah.
Ford, GM, them cutting back, doing things, Rivian struggling. And perhaps
Well,
some
and
of the things that I mentioned were, things that people haven't been hearing about, which is the whole charging station problem and being able to
yeah,
charge them.
yeah. And
So,
I mean, if any of the viewers see an article that they read and they want to get our take on it, send it to us. Comment and put it in the link in the comment section or something, and we'll
yeah,
we'll take a look at it to give our take on it and a deeper dive of what we feel is really the kind of the truth behind it. So, but just be careful out there in the articles that you read.
yeah, lots of them trying to get you to buy into things while they're probably selling.
Yeah. All right. Well, I think that kind of wraps it up. We'll see you all again next week. We got some pretty good material lined up for the coming week, so we should be pretty active. So stay tuned.
Stay tuned, guys. Good to see. Yep. Good to see you. I can't see any of you.